Hey everybody, Brian here from quantlabs.net. So, over the last few trading sessions, my system, the Quant Analytics, has made a couple of calls last Friday. Just want to give you some samples. These are the ones I would have put money on. So these were sent out on Friday. Let me just pull up my calendar here. So these were sent over June 23rd, and now we are on June 27th. So here's what the calls were for. Nikkei 225, the day on Friday, it was at 2110, went up to 20, it's a typo there, 2050, and we got a, let me just check my spreadsheet here, we roughly got a 0.5% move. Then when I factor in the Tudor, I probably got that wrong. That's a Saudi Arabian index, and there was a lot of calls here. Between Friday and Tuesday, it was up 5%. That's a nice call. The other one that I put up was using the Forex trading volatility script that I put out late last week. Here's the difference between Friday and today. It went up 1.89%. The other ones that were the most volatile are US dollar, South African. It only had a, I can't remember, it's a puny little move. But again, if you're using leverage, here's the amount, 0.3%. The South African Japanese yen up 0.5%, and then the euro and British pound up 0.85%. Now, the nice ones that would have done well are this one, the Tudor, Saudi Arabian, because if you factor, you want to put on a position of this one, you'd already be up let's say 5.4% over 2 trading sessions. And of course, we've identified this one, the British pound with the Japanese yen, with a nice 1.8% move here, which is pretty good. And that would exceed, because it's 2 trading sessions, that would have exceeded 2 days worth of trading, or pretty close to it. And that would have been nice. All the other ones, if we were using some leverage, we probably could have done pretty decent with these 3 other pairs as well. So, in a nutshell, things are looking pretty decent with the methodologies here. Does not mean it's guaranteed, but so far so good. And I haven't looked at the markets overall, but again, I'm using Market Watch as my data source or my chart. So if I do Market Watch for S&P 500, just as a standard benchmark against the overall moves. I've done this, so I should have done this, but typically this is how I do the quick analysis, even though it is a little dated. So for 5 days, the move actually was down between Friday, because it was at 24.34, and then it went down to a little bit at 24.21. So for that same time period, the S&P 500 was down, but yet 5 for 5 calls were all profitable. We got a potential system in place that seems to be working pretty decently, but the nice one was definitely this little call right here, this Tudor, and pretty happy about that. Not one was losing money, even though the S&P 500 was down. Pretty good, very excited. I'll do more of these as we move forward, just to show you that the methodology seems to work pretty decently on the calls, whereas, again, the S&P 500 was slightly down for that same time period. Over and out.